Right, hello and welcome to Camel Finance. I'm your boy Camel, and I just want to make a quick sort of announcement, really. I've had quite a few of you reach out to me and give me some constructive criticism to say, please don't entertain the trolls. You really don't have time, or you don't have any interest in hearing it. So yeah, I've taken it on board. Okay, we won't be doing that. I thought it was kind of funny, but I appreciate from your perspective. You come here to receive value for your time. You give up your time to watch this content. And there's really no value in me pointing at people and saying, look at this guy, what a fool. So thank you for the constructive criticism. I have taken it on board. And going forward, we will no longer be entertaining any trolls. So without further ado, let's get into today's episode. We, first of all, have a number of things that I'm pointing at. And I've got some interesting content. Quite a few of you have been messaging me these different types of economic cycles and economic confidence cycles. I'm still looking into them. I could have covered them today, but I wanted to be sort of really sure what I was looking at before I actually talked about it. But there's some very interesting cycles that I wasn't aware of until yesterday or the day before that are also showing confluence that we should be open to seeing some kind of deflationary bust, some kind of recession in the middle of this year. So there are multiple signs pointing towards that. Of course, yesterday I uploaded a video, I had a video set to upload where we were talking about 4-year cycles in the S&P 500. Potentially they are pointing to a bust mid-year, roughly. And it seems to me the more I look around, the more likelihood there is that this is actually going to end up being the correct stance. So I've been very consistent in saying that I think 2024 was going to be significantly harder to navigate than 2023. So far, that seems to be the case. So buckle up, because it's probably going to be a bit of a bumpy ride. In the short term, I still remain very, very bullish. I still think we see this blow off top. And over in China, we are seeing liquidity start to surge again. So China is going to prop up its markets using this massive liquidity injection. And that is going to be to the tune of, I think it was around 2 trillion yuan, right? Which is about 278 billion US. So remember, China has slipped into deflation, and now they're having to bail themselves out with freshly printed money. And that is, of course, the expectation that we're going to see in the US and everywhere else, right? We expect to see more and more deflationary prints start to show up. We expect to see this shift from disinflation to deflation, where we actually see negative CPI prints. And of course, this is likely going to be coupled with this global recession right at a time when the majority of market participants will probably be under the false assumption that we have indeed seen a soft landing or no landing, and that we've got a massive secular bull market ready to unfold in front of us. So this year is going to be wild, even if I'm wrong, right? Even if I'm wrong and we have got a secular bull market, well, that's going to be wild too, right? I mean, look at the price action of late. We're at all-time highs for the stock market. Bitcoin and crypto have got some catching up to do. So whether I'm right and we go blow off top and then huge meltdown, that's going to be interesting to navigate. Or whether I'm wrong and we just have, some kind of trend, some kind of overall bull market. We've just found the lows as of last year, and now we're moving towards the start of a secular bull market. That would be pretty fun too, right? That would be everyone's in expert mode. That would be easy mode. That should be buy the thing and hold it and it goes up. So either way, we're going to have some good times this year. And of course, something we've been keeping our eye on this channel is the BTFP, right? This is the Bank Term Funding Program. This is the QE in disguise to plug the holes in the banking system. And we've just seen that the Fed has said no more bank term funding program, right? Now, in theory, any bank with a held to maturity loss on US treasuries or mortgage-backed securities should swap them for fresh dollars by March the 11th to buy 1 year's more time. But if the Fed starts to cut or end QT, then bonds could rip higher and the banks will have locked in very poor funding rates. So it's decision time for these bankrupt banks, right? I've said many times, of course, they could kick this can down the road. Perhaps it's not a big issue. But to me, this has always smelt a little bit of a controlled demolition. This has always got my spidey senses tingling because of the way they did it. I'm not going to run through this. You've heard me say this a million times before, but certainly something to keep our eye on as we get closer and closer to March. Historically, bank failures have been very bullish for Bitcoin, and I suspect this time is no different, to be completely honest with you. Whilst the price still needs to do some working out, whilst we still have to find that cycle low for Bitcoin, under the hood, things continue to get me more and more bullish. There's around 10,000 Bitcoin a day being reacquired at the moment. So that is up from 857 to 1,000 a day before the ETF launch. There is massive demand for Bitcoin, even though the price doesn't reflect it at this moment in time. About 100 to 150 million dollars a day of average net buying so far. So that is up from 30 to 40 million dollars a day before the launch. These are big numbers, okay? These are big numbers. This speaks to a beach ball being held underwater. Volumes and inflows are increasing, not decreasing. And the advisors have not yet started selling Bitcoin. They haven't even started training yet. So the Fed has not yet cut rates, but we could see this on the horizon. Now, I'm not in the camp of people that thinks this is bullish for Bitcoin. That is to be determined. True inflation data is showing inflation under 2%. So notice how now we've finally got one handle. More and more people are starting to point at this and go, oh, hang on a minute. maybe inflation is over. Hang on a minute, maybe we could even slip into deflation, right? Notice how people have picked up on this only once trueflation has fallen onto a one handle. But it doesn't change the facts or the data, and the data and the facts show that we are indeed swinging from that inflation towards deflation. BlackRock and Fidelity are waiting for the GBTC bleed to complete before even starting to deploy their capital, which is sat on the sidelines. Major advisors are not even allowed to fill Bitcoin ETF demand orders as compliance combs through the approvals. The supply is about to drop from 900 Bitcoin a day to 450 Bitcoin a day after the halving, which is around, 85 to 90 days away now. And the miners are still selling. They're not holding on to the Bitcoin like they normally do in a bull run, right? Not to mention, we've just had options be filed for, and they've not yet come into the space to turn Bitcoin into a cash flow generating asset and to allow the people that are holding large sums of this ETF to hedge some of the volatility using these options. So we've still got a bunch of doom and gloom boomers out there, right? We've still got a bunch of people saying, left translated cycle was completely invalidated and blah, blah, blah. We're not going to go into that. But I love to see all the doom and gloom out there. I love to see the wall of worry. The stock market has breakout retested and resumed off of its prior all-time high. And everywhere I look, there are people calling it a bull trap. So this is a dream come true for a bullish setup. Right? If everyone was jumping up and down, excited, euphoric as the stock market breaks out to all-time highs, that would actually be a sign that the top or a pullback or a correction is needed in the immediate term. But the fact that everyone doubts this rally, this has been the most shorted, most doubted, angriest, most hated, most salty rally I've ever seen. Even I was saying, once we get to all-time highs, people are going to FOMO into the top. But now we're at all-time highs, they're still calling for bull traps, right? They're still calling for the double top gang, even though we've gone through, breakout retested, and resumed off the all-time high. So this is a dream come true for bulls. If you can just take your eyes off of the doom, off of the news, off of all the fear, and put your eyes on the prize, then there's a really, really, really nice wall of worry to climb into price discovery. These are very, very, very rare setups, and these are very, very, very high in opportunity for those that are able to stay objective and not marry any one narrative. But under the hood, Bitcoin continues to do Bitcoin things, right? Additionally, the number of Bitcoin whales holding over 1,000 Bitcoin is increasing. What does that tell you, right? Whilst these, to use British hodl's term, $1,000 net worthers are telling you that the top is in and the ETF is going to mark the top once more, and we've retraced into the fib retracement, and therefore we have to go back to zero. Whilst people are calling for the 9K, 9.6K CME gap to be filled, there's a bunch of people calling for 3K I've been seeing of late. Whilst all of those people are doom and glooming, right? Whales holding over 1,000 Bitcoin are increasing the number of Bitcoin. And the number of said whales, these high net worth individuals, getting their massive exposure to Bitcoin is also increasing, right? We've just seen the uptick in the number of whales go from 1,480 to 1,513, which represents a new 18-month high in the number of whales. So all of this, while whale withdrawals have been outstripping deposits for 6 consecutive days. As you can see down the bottom in orange here, number of whales up and to the right. And in case you're one of these people that thinks it's potentially a bit too late to get into Bitcoin, or we're not quite early enough, take a look at this. Bitcoin right now has the same number of users that the internet did in 1997. We are just getting started. Let me draw your eyes to this. This is Bitcoin here, right? This is all Bitcoin has done. This is as adopted as the internet was in 1997, except there's a key difference here in that Bitcoin is being adopted at almost 2 times the rate that the internet was. So there is still massive opportunity. There is still massive scope for upside and an exponential adoption curve that the human brain is just not wired to comprehend. Whilst on this channel, I've spent a lot of my time expecting to see an early top come in for the Bitcoin market. As it stands right now, we really aren't doing anything out of the ordinary for Bitcoin. You can see back here, going into the halving, represented by this dotted line here, we were around 62% off of the prior all-time high. By the last halving, it was 52% right here, going into the halving. And right now, we're sat currently somewhere in the neighborhood of 42% from the all-time high going into the halving. So nothing is really that different at the moment. However, like I've been saying over and over again, we still have to be open to the fact that we could well see some kind of blow off top that then tops early as people front run this market one day at a time, as always. And of course, I still would rather see a right translated cycle. And so the too long didn't read is Bitcoin's network is growing in line with the standard power regression curve. And that means that the S-curve nature of Bitcoin's network remains on track. Okay, so despite all the fear, despite all the narrative, here we are, right online, still have plenty of scope to see outperformance to the upside over the coming days, weeks, and years. As it stands right now, we are currently putting in what looks to be the mid-cycle top, Now you can see this down here, right? We get a rejection and then we soon turn up and resume to the upside. We get a rejection and then we turn up and resume to the upside. Rejection, this time with a much steeper decline into that C19 plunge before resumption to the upside. The question for me is this time going to be different? Now, I know a lot of people will be saying, no, it's going to do what it always does, right? It's going to do something like this and then resume to the upside. But I am wondering if what we see is this thing very sharply and suddenly reverse as we move into this parabola. So I'm going to be either invalidated or validated over the coming days and weeks, and it's going to be interesting. I would really like to be able to put this to bed. I'd like to be able to say for sure whether we're going to go left translated or right translated. For now, we have to take it one day at a time. We have to see a few more candles before we can figure out exactly what's going on. I also found this, and I thought this was pretty interesting. I know a lot of people have been focused on the fact that Bitcoin recently touched the 786 fib retracement and has since rejected. And a lot of people are saying, well, there you go. There you have it. We must go back to the lows, or that must have been the top, and we must be going to 3K next. But interestingly enough, what no one else is pointing at is we've done this multiple times before, right? In the case of C19, we hit it, and then we did indeed come down all the way to the lows. But it took a black swan. There was no ETF. There was no outstripping demand. We weren't into a halving at that moment in time. But what no one seems to want to entertain is that back in 2016 and 2017, we hit that retracement, had this shakeout, and then we went straight into a parabolic advance. So whilst everyone's eyes is on the cycle before, right? Whilst everyone's eyes and focus and attention is on this, where we hit this retracement and then we go all the way back to the lows. Structurally, it wouldn't be out of the ordinary to expect to see this drop into the next cycle low that we've been expecting around the 9th of February, followed by one of these face-melting rallies. So again, anything and everything is to play for here. Anything and everything is on the table. Nobody knows what's going to happen, but we are at least going to find out for sure in the next couple of weeks. I also posted this a while ago to Twitter. When was this? In the middle of November. And I said, look, this is the Bitcoin to gold ratio. And if this chart is to play out, if we were indeed to move up strongly and get a touch of the top of this resistance channel, then we could see Bitcoin roughly equivalent to about 100 ounces of gold at the top. And I said, if this was to play out, exiting the Bitcoin into gold would be a nicer way to do it because I can hold the physical gold in my hand. I don't have to trust a banking system or exit to stable coins that can be frozen or hacked or whatever. So I really like this idea to exit some of the Bitcoin to gold and then hopefully flip back again, exit the gold to Bitcoin at the touch of the bottom of this channel. So I really like this as an idea, right? Exit some Bitcoin to gold here, exit some gold back to Bitcoin back here, if it's to play out. Well, since then I was taking a look at this chart and you can see we've progressed quite nicely amongst it. Now this fractal, and of course it's just a fractal, not to be traded off, it's more for illustrative purposes, but I said if this fractal was to continue to play out, then we should probably expect to shave another 2 to 4K off of the Bitcoin price before we resume to the upside. But what's really, really interesting about this is assuming we were to, for Bitcoin, find that cycle low into early February before resuming to the upside, we would likely also see gold enter a decline into a weekly cycle low during this time, which of course would fuel this ratio, this fractal move up towards the top of this channel. So if I pull up a gold chart, I appreciate it's a little bit messy, but for those of you that have been here for a while, I drew this yellow squiggle way back when, right? And I said, this is kind of my expectation. And in here, when we were talking about maybe it's time to get long, maybe it's time to take a long, maybe it's time to respect this if it's going to break out to all-time highs, but it never really did, right? And since then, this right here is a weekly cycle, and we've got 1, 2, 3, 4 daily cycles inside. That fifth one, you would expect to left translate and roll over for the decline into the weekly cycle low, which is due somewhere in this neighborhood, right? Somewhere in this neighborhood. So I wonder if what we're going to see now is perhaps one more push up, cycle low, left translation, failed cycle, and that decline down into the weekly cycle low. Now, of course, if we do this for gold, not only is that in line with expectations, but gold will be, of course, selling off. Now, as gold sells off, Bitcoin should be on its way to find that cycle low and starting to resume what I believe will be this uptrend, right? So far so good. Notice we've got a 4 at the front of the Bitcoin price, okay? After all of that panic, after all of that salt and fear and everything else and uncertainty and doubt, here we are, right back practically inside the range. Now, the fact that we've had a failed cycle tells us to be open to seeing a counter trend bounce and a rollover into that cycle low. How low down it goes is anybody's guess. It could easily be equal to or above this prior low from back here at about 38 and change. So it doesn't have to roll over all the way down to 35, and it could of course come all the way down to 32, and that would still be healthy and bullish and to be expected. All I know for sure is I've seen enough of these cycles, I've traded enough of these cycles across multiple asset classes to know that once you get a failed cycle like this, no matter what happens to the price from here, it needs to have enough time to elapse. We need to go forward into the future enough to get inside of that timing window before any significant price action can occur. So whether we go up, sideways, or down into that cycle low, the thing I know for sure is we need to allow enough time to get to that cycle low. Once we're here, Bitcoin's got a very good chance of coming out of here swinging. And of course, if it's to do that whilst gold is declining into its weekly cycle low, then that should ignite this fractal to continue to play out. So it's been a good call so far. We're about a third of the way there. Like I said, if those stars can align, then we could well see the rest of this fractal play out. And that, in my opinion, would be the 200 IQ exit, especially given the state of the banks that we keep covering, right? Do you really want to exit your Bitcoin and hold it in a bank during all of this bank chicanery? I personally do not. So this is one idea I like. I will continue to cover this and update you as we move forward towards it. So what else is there to say, right? Patience until we get to that cycle low, and then we can talk about adding exposure back for Bitcoin. Gold, we kind of expecting to roll over. The DXY, it was a beautiful touch of resistance as of yesterday. So far, excuse me, did I say resistance? I did, didn't I? Support. This upward sloping red support line, right? You can see we wicked it, but we've held it. We're back into it today. Break down from here, and I'm going to be pretty much as happy as I could be in markets, because like I've been saying over and over again, this has been the base case expectation, right? For the 3-year cycle low to form in the mid-90s, somewhere in March or even April. This has been the base case hypothesis since we called the top in the dollar back here, right? And there's been one or two deviations. Like, for example, I didn't call this. I didn't expect to see this rally. But overall, it didn't really harm us too much, did it? It didn't really get in the way of the hypothesis. And since then, I've been more than flexible and adaptable, been willing to pivot if the market proves me wrong. We've been so far entertaining the idea that this is the 3-year cycle low, and I've been very clear in saying that if we continue to hold this support and get above this 104 and change level, then above here we should be able to see this 3-year cycle low be confirmed, and thus something may well be brewing under the hood that I wasn't prepared for or expecting. But like I keep saying, that has been a last chance saloon, right? We lose this upward sloping red support line, we then have to come down and target the cycle low from back here, print a failed cycle. That tells us with confidence, with certainty, that this is indeed not a 3-year cycle low, and we have one more opportunity to see it roll over. Of course, if we can get this move to play out, then this will ignite a massive risk-on moment in risk assets. We will see Bitcoin probably catch up to all-time highs. That's my hope, at least, and we should continue to see the stock market enter this blow-off top moment. So, eyes on the prize. Remember, we got the FOMC to confirm a pause in Fed funds rate at the end of this month, and then I would likely think that that catalyzes the rollover if it's going to happen. We've also got the 10-year yield look right into resistance. So can we get that rejection we were hoping for and expecting? Can we see this roll over one last time? And again, if we can, then expect risk to come on very, very strongly. It looks like we're about to cover this oil short, so I'll be interested to see if this happens. As it stands, you can see we're not quite into the stop loss that's been choked up. So I'm going to continue to push this, and we'll see what the market can give. I'll update you tomorrow, but I kind of expect this to be stopped out now. So it's been a reasonably good trade. We'll be locking in something like 14.5 points on the way down, which is pretty good. If you're a spread better, you know what I'm talking about. The stock market, still bullish as a son of a gun, right? Still clearing the all-time highs, still moving up, still holding support, still holding the cycle lows. So long and strong continue to push. The NASDAQ looks even better, right? Blasting off above that all-time high level in green here. And the Dow Jones, as you can see, not stopped out, stop is choked up, still holding support. So long and strong continue to push, very, very close to that measured move at 38.2. The VIX, generally speaking, seems to be compressing, so we like that, and I expect this thing to start to really drop off once we confirm that pause and get some of the uncertainty out of the way. Russell 2K, can it hold the breakout retest resumption, right? This is a perfectly logical move, retest. We need to see it resume, right? We really need to see it resume. If we can see it resume, we can breathe a sigh of relief and be more and more confident that our melt up is indeed coming to fruition. And last but not least, the crypto-related equities, not really doing anything out of the ordinary, right? If you know, you know. Still kind of hoping to see some structure built out, right? Counter trend bounce, to trap a bunch of people, that roll over into the cycle low, and then we can go from there. Same idea across the board, right? Breakout, reject at resistance, build some structure into the cycle low and go. And here's Marathon, same deal, right? Hoping to see some structure built out, a rejection at resistance, a rollover into the cycle low and go. And of course, then we'll be looking to add the position and ride this thing far, far higher. So as ever, one day at a time, see what the market can give. So far, so good. It really does seem like we've got everything aligned to see major upside over the coming weeks and months. But there are multiple factors that are telling me we are going to get a severe recession and a deflationary bust somewhere around May or June, perhaps. So we'll see. if we're looking at May and June, then that kind of tells me that we are indeed going to see cuts in March. They're not currently priced in. It's only around 50-50 at the moment. But perhaps after we can see a lower CPI print in a couple of weeks, we can shift that balance of probabilities back. So as ever, one day at a time, let the charts tell us what to do. I'm your boy Camel. I hope you're doing well in life. I hope you found value here today. And until next time, take care from me. All the best. Cheers. Bye.